This is Jay Rosenberg of Arrival Capital Management with an investment update. Since my last video update back in March, stock markets around the world have dramatically turned upward, with the increases of about 30%, give or take, depending on the index you use. I'm happy to say that despite a prudent, conservative strategy that Arrival Capital has pursued for its clients since the beginning of the year, Arrival Capital client accounts have also appreciated dramatically since the March lows. This despite keeping a relatively large amount of cash on hand in client accounts, both to serve as a buffer against further downturns and also to provide buying power to take advantage of some incredible bargains that have been created. Many of the stocks that we hold are in the materials area, healthcare, retail, have increased, in some cases doubling off their lows from a few months ago. Selected financial stocks have also increased dramatically. Our strategy that we communicated to clients at the end of the first quarter has been to keep a proverbial foot in the door of equity markets even through this difficult, tumultuous time. By keeping exposure and avoiding the temptation to go completely into cash or short duration bonds, we've been able to participate in this market rally, increase client account values, and also, again, keeping the cash in mind, keeping the cash in the accounts and selectively picking at opportunities that they present themselves, we've been able to make back some of what the market downturn has taken away and position client accounts to ride out the rest of this economic storm and have the staying power to take advantage of what will continue to be bargains and great opportunities once the dust settles. Again, a lot of times people are despondent at the lows, and then when the market takes off as it has and goes up 20-30%, feel like they've missed the boat if they're not fully invested. The result of this is sometimes to get whipsawed, to sell at the bottom and then to buy when stocks have appreciated. By keeping exposure throughout upturns and downturns on the best possible ideas, you limit this temptation and are able to participate in upsides without exposing your entire portfolio to what we've seen can be rapid downturns. Our overall strategy is to stay fairly conservative over the next few months because, again, I believe that there will be great opportunities even when we can finally declare the end to this financial crisis, when the banks are stable, when the volatility declines, and even if stocks move up another 25-30% from here over the next 3 to 6 months, which is likely, though I don't think probable, there are still going to be great companies that are going to be either left behind or are not going to participate, or then, in fact, we can get back to the discipline, which is value investing, which is looking at specific opportunities, company-specific events, and whether it's spin-offs or turnarounds, the kind of things that we've spent time investing client portfolios profitably in before this economic storm. So it's really a strategy of being conservative but participating in whatever the market gives us now, but also maintaining our financial staying power to have the cash on hand to not only pick at selected opportunities over the next few months, but then be able to really get back into the value investing game that we have been able to profitably participate in over the last 5 years. So again, I think we have seen hopefully the worst of the financial fear and panic that took almost every stock and company down to unreasonably low levels. But I don't think we're out of the woods in terms of volatility and out of the woods to potential hiccups in the economy that might cause stocks to sell off. But I think that we have a strategy in hand that will preserve client capital if bad times don't lift soon, but also, again, we will have the capability and the capital for clients to take advantage of things when the dust settles, and then we can pick out the opportunities that can best serve our clients' portfolios, not only for safety, but also to hopefully lead to meaningful appreciation in the years to come. So, let me take this opportunity to thank all my clients for their confidence during what's been the most difficult period in the financial markets in at least 75 years, and also to invite anyone who's interested in the Arrival Capital approach and in having someone to shepherd your own capital through these difficult times and hopefully to better times, to contact me. My email is j@arrivalcapital.com, and our website is www.arrivalcapital.com. Again, thanks for listening, and I will see you again soon.